Good morning. Oh, it's the day before the end of the world. Not our world. I guess it probably won't happen, but we'll see. Good morning. Good morning. All right. So markets are gapping up a bit here and always gapping up to where? Well, the Qs were above the highs there, but who could be so foolish to be buying after a 16% advance in 13 days? Not me. So we'll see what happens. Um, Yesterday in the green room, some of us we were shorting this, expecting a gap fill. That didn't happen. And I mentioned as this was starting to form this buy setup, I was like, well, it's not looking good. And we went in for a little scratch, not a big deal. And so now it's gapping up. And the question is, do we get, just looking at the 65 minute, a retest and reversal pattern up here on the 65 minute. So that would be I'll be looking for. And you can see it's right up there at the prior high. It was above it earlier. And so, opening up there, and then we see what it does, 5 minutes, 15 minutes. Um, and so it'll gap up a little bit, but it's an inside gap. And just looking at the cursor on my daily and 65 minute. We'll see if it comes back down. And I don't think anything of significance is going to happen today. Like forgetting the news. If he's going to go through with it, it's probably it'll be tomorrow morning that we'll see. Um, but because of the uncertainty of that, I'm thinking maybe it just trades within this range here and fills that initial gap. We'll look at where the cues goes, the trader pivot lines, and how they react to them and bounce back and forth. But you know, if we do get a reversal up here, maybe that gap fill would be a reasonable expectation for today, and then we'll just see where we go from there. But expecting some kind of corrective price action after such a large move in a short amount of time is just common sense. So maybe eventually it works its way down here, or it goes sideways for a longer period of time. But this void, this lack of any support is calling. And one of the visuals of a void will be an absence of pivots in the time frame that you're looking at. So you can see lots of pivots here on the 5 minute chart, pre-market data, as it wiggles around. And that day it just gapped up and go, gap up and go, gap up and go. And this was like an exhaustion gap. That's how we would look at that because of the extent of this move. And there's very few pivots on the 65-minute chart. But where there's pivots, there's support. And then when there's no pivots, there's little to no support. And this is where the Fibonacci aficionados come into play. And, they connect their dots and, maybe they get some overlapping fib lines that maybe where prices stall. And, that's just part of how things go in this business. Lots of crazy analysis um, to sell to the unexpected, right? The holy grail. Okay, so minor gap up, potential retest and failure. We'll see how it deals with that resistance from there. Spiders, pretty much the same. The bottom of that bar makes even a more significant support area now that there's an inside day. And it was higher. So we moved the cursor around, same as the Qs, up there near the resistance yesterday or 2 days ago. And it's pulling back. It's trading inside of that little range. And we'll see if this pivot holds, which is yesterday's low. And then from there, if it doesn't, the expectation is it fills this gap. And I don't think it's coming down here, but whole numbers, uh, if for whatever reason selling does pick up, you got the unfilled gap and you got 700 and those alignment of a support area and a whole number where there will be a large amount of options activity will have a high tendency to act as a reference point of support. Right? SPY, SPX, I should say. We'll double check that. And so the put strike from yesterday came up quite a bit. Nothing even got, prices didn't even get close to either one yesterday because it was just an inside day. It went nowhere. Um, so call strike went up a little bit. This one came up quite a bit. So sentiment is shifting as you would expect it would. Remember at one point it was way down here. And now it's in the gap fill. And so if you're a credit spread trader, the top strike should be a no-brainer. And the bottom strike, if things start to sell off, you certainly don't want to get in the way of that. But if prices should come down into the gap fill area, this would move down and then look for if there's premium under 7,000. And the same thing with SPY, which doesn't have as much premium, but if you can get under 700, that would be great. So, and there's another gap down below. There's a gigantic gap down here. And unless something terrible happens, I would say it's logical to think this gap really shouldn't even get filled this year. But we got a long way to go as to whether prices are going to chop around and whatever they're going to do down sideways. All right. IWM, it was a little stronger. It got up near the prior high, and that's actually gapping up above the high there. But sometimes this is what we call, if you get the retest and reversal, or M tops, W bottoms, we call it a bonus, like a little extra. So if you, this is on the 65-minute chart, if you get a gap up, and whether it gaps up, we'll see by the open, but a larger gap up and then a large red bar. That is a good pattern suggesting it's going to go down. Remember, there's a gap fill down here, and coming into that gap isn't going to damage this daily chart whatsoever. It's just probably what should happen, and the sooner it happens, the better. Diamonds, where are they? Gapping up a little more. United Healthcare gapping up. And you remember that was a lot of controversy about inappropriate charges or illegal things. The CEO got shot. And now, I mean, look at this chart. And now an earnings surprise. It's gapping way up there. What a disgusting chart. Anyway, it's gapping up, and that is going to bring the Dow up with it. We'll see what it does holding on to its gain. But that's gapping up into resistance as well. There's an unfilled gap. There's another one down here. Oh, maybe it holds up there and joins the new all-time high party. We'll see. Bitcoin down a little bit. Just not doing anything. Not doing anything. Everybody's waiting to see what happens tonight and then tomorrow, I think. Oil is down a little bit, so that's not doing much of anything. So really nothing is doing much of anything for now. The world waits. Gold is down. And I've mentioned several times that this advance being preceded by a drop like that out of a consolidation, this price action is normal. Right? You think it would go up significantly. This kind of pattern doesn't support it. Similarly, a drop like we saw from a giant rounding top in the S&P 500 and the Qs wasn't supportive of it ripping for 13 days to make new all-time highs either. Things can change. So I mentioned that to be careful what you believe is possible or not possible, and then put your money on the line because you can get caught into something like what happened, which we can imagine. There were traders and or hedge funds that were short the market when the turn came, and that's what helped drive prices up. Hey, McGraw, how you doing? Glad you stopped in to say hello. We miss you. Right. McGraw, those of you in the green room, he stepped in to say hi here. All right. Similar pattern in silver, you know, the move down, the grind up, and now we've got a little tiny breakout failure right there. So maybe that's going to come in a little bit. And let me look at IWM. Forget about the VIX. It's just low. It doesn't really matter. And, you know, one of the things to keep an eye on is, you know, the semiconductors. You know, they also have a giant void below. And we'll see, where are they at here? They're gapping up. They were gapping up above the high. Now, historically, what would happen with a situation like this is, where's my, you know, we look patterns, historical patterns, of course, and look, being extended like that, normally you'd get a bar like this at some point. It doesn't change the fact that it's in an uptrend, but it's what historically happens, and you get, you know, some kind of a pullback, maybe toward that bottoming tail bar, and then up and away, right? We'll see how far it retraces. Oh, I'll post that what McGraw is sharing, and the charts do support that. So they'll be, I guess, buying the dip on the way down so they can accumulate, and certainly makes sense to be thinking buying dips as prices pull back in semiconductors, Qs, S&Ps, the Russell. But a pullback is something that needs to happen, or it's got to go sideways, right? We'd prefer the pullback because that's going to present more opportunities than a sideways chop. This kind of stuff, unless you're doing primarily credit spreads, makes it very difficult trading environment. So other than that, interest rates, I saw, you know, home builders are improving. That's over here. Nice little extra buying, and they're gapping up here today, up into that resistance, right? So I forget whether we have this one in the ETF letter or the home construction ETF that we got as they were beginning to make the turn down here. But interest rates are, see where they're at here. They're actually up a little bit today, and those are gapping up. So they have a pretty tight correlation with that. But interest rates have not moved down as much as I think they should have, or would like to have, with that advance in the market. And really just a sloppy decline into where buyers are going to show up. So we really don't want to see, if interest rates start percolating to the upside, you can just set an alert up here. That could be your heads up that, you know, if markets are holding steady, that something under the hood isn't acting right. So keep an eye on that. And other than that, we'll just see what today brings. You, Dan.
Morning. I think it's going to be boring also, waiting for the The next war news deadline getting to be annoying. Look at this plug from yesterday we were watching. Saw it late in the day, but would have been good over Friday's high. Home Depot up. We're in this. I said sell a third pre-market. We're also in ITB in the ETF letter. Gapping up. There's a couple housing earnings. And I went through all of XHB this morning and typed out a bunch of things that look good. Here, I'll show you right now. These were all an XHB Sky, Champion Homes, bottoming pattern, KVH, bottoming pattern, gapping up. Pole I like, but gapping up. LOW would be a good put spread, but I checked too liquid. S3I, bottoming pattern, and a nice 15-minute chart. And this one might be a 10-minute high. Builder, bottoming pattern. Looks good. That looks like that can go to $100. So that looks good. SPRC, is that a builder? No, it's not. It's just on my cap list. Forget about that. Other alarms, pins. We bought call options on there yesterday. Looks good. ET 123. This is also in the XHB. That's a nice 123, bullish weekly, monthly. My up alarm went off. Now it's coming back in. Let me reset it. ET. Lulu. Lulu alarm gapping up. Another bottoming pattern. Let's watch that one. It does have some juice. Let's watch that for a put spread. I'll reset my alarm a little higher. I mean, there's a number of good looking charts as I've just shown you. The only concern is, you're like playing musical chairs with the broader market being up so much. So, about 168.80. Good go down here I have. Nice bottoming pattern. Looks good. It's up a couple bars. So if the market comes in, this should retrace, but it looks good. AMD, I have the call spread idea. I haven't learned 275. Amazon giving another 5 billion to Anthropic. So that, that makes it gap up. I don't understand the fundamentals. And Apple, obviously in the news, with Cook retiring from the head job. That's coming in a little bit. Actually, it's not that bad. I mean, you never know the reaction. Not that bad. Meta. Now it's extended with a bear reversal on the daily. That's a nice gap. With a avoid possible day trade. Little scalp. Tesla. Same bullish 15, but I don't like the daily. Let's go to earnings now. Alaska Airlines, $42, gapping down, no pattern. They said they cannot give guidance because of high oil prices. Jets doing. This ETF never has any premium, but this could be a day trade short, 5-minute low. Small little bear out in reversal yesterday. Look at this 15-minute chart, small gap down. Short 5-minute low. Stop over this base. Low risk. Late stop. Stilled. Steel. Had a big run into earnings. This big gap here. So now, 30-minute low actually. Call spread idea. There's no pattern. A lot of regional banks reporting. It's relatively flat. Nothing. I'll come back. And I lost my pre-market. No, I didn't. So it just has no volume. Shows it up $1.50, but look, I don't see any prints. This one flattish. You could set an alarm at 78.50. Might give you a day trade. Yeah, I'll do it. Gulf Delta looks like, after 10 a.m. shorting yesterday's low. The breakdown daily, weekly. I'll set alarm 331.50. UNH, Greg talked about earnings gap in the year. It's gapping right to this gap fill. That actually could be a 30-minute low. Call scrim. RTX military swapping around. No pattern. DHR, I think it's housing, another bottoming pattern. That one's interesting from bottoming pattern. I'm gonna set an alarm at 199. Looks a little similar to that stock builder that I showed you, BLDR. Knock military, we said yesterday, if that opened flattish, we could short today's low. That's a closing breakdown, but no entry now. Triple M was down a little bit. It's popping right now, but no pattern. DHI housing, DR Horton. A lot of these housing. Wow, that's a big gap. 164. That could be a 30-minute low. Call spring. John Levi. It's a sloppy bull rectangle, but small little gap up, so that's worth watching. I think I'd wait 30 minutes. MSCI, I mentioned bottoming pattern. Look at all these flat MAs. Gapping up 589. Need a pullback. Northern Trust, Regional Bank. That looks like a 30-minute low. Call spread. Gapping down. Call spread if there's any juice. Costco was a potential bottoming pattern. but now it's gapping down. So, and unless it reverses back quickly, could be a 30-minute low short. What do you think about Oracle? JR is asking. I was looking at it this igniting day, and it was too late for me because it was up huge, and the 15-minute was extended. Well, got more extended. There's just no pattern here, JR. It's far from the 20. It did break out. I said it looks like a intermediate term bottom on the weekly. There's just no pattern. You need a pullback. Got an unfilled gap here and here. EFX 190. It's an ugly gap right in the middle. Possibly a condor. BGX 205 and change. That's an igniting gap. Put spread. Watch on a pullback. Vicer 212, bearish gap. That's a nice call spread. Gapping under a green bar, a little 180. Got a couple calls, credit spread ideas in these. VMI 420, 10-minute high. Beautiful put spread idea. If there's anything at 400. Let me open my tunnels. Diamond's holding the best here pre-market, and that's courtesy of UNH. I've never agreed on that price based ranking. UNH is expensive, so it swags the diamonds. When I say VMI puts, there's no weeklies and they're spreading. Yeah, no, Alex, I'm just saying, I'm just going back in history, saying the Dow Jones, who invented it. I guess I'm saying I think that's a stupid reason. Because then, you could have a stock that's $1,500 and never splits. And then, that's 50% of the whole movement of the diamonds is one stock. But I wonder if that happened. I wonder if Dow Jones would call them up and say, you know what? We think it's time for you to split because you're moving our thing too much. But talking about expensive Dow, look at Cat, $800. I'm just glancing here. Microsoft 420. Oh, UNH 352. It's actually Cat. Oh no, Goldman. Goldman is 945. So that is the biggest one in the diamonds, followed by Cat. Wow, I just didn't remember that was so friggin' expensive. Hey, look at car here. I forgot to show you. This was gap. Remember I said yesterday, I hope it gaps up $50. It was gapping to 690 this morning, pre-market, and that would have been my gap and crap. I think we're getting very close to a tradable short here. They do have 910 strikes now. Remember I mentioned yesterday that I had 95% confidence that they would open them up higher. Wow, and this is tight. Oh, that's tight. 83860. Now it just opened to 7 to 10. $910. Shoot, I was gonna pop that. All right, I'm gonna watch this. Somebody got filled 1040 on the 900s. That was a nice fill.
Hey, Dan,
Well,
At some point that thing's going to come down a lot. Would you agree?
yeah,
So when we get evidence of that, why not consider buying a put that
we
expires in a month or two?
we talked about that. It's the stupid spreads. If you're
I,
okay with a $8
well,
spread,
we probably get the midpoint.
I,
I'm just thinking,
that's fine. That's
historically,
fine.
these things, have like a crash.
I know, but that's fine. It's fine if you know what you're dealing with. I'm looking at it now, $14 spread. I ain't paying that. But that's me. And then, the second problem with that, which is even a bigger problem, is this is the opposite of a climactic buy setup in the spiders with the VIX high. So you're paying massive extrinsic value because of the greed component right now. So you'll be battling volatility contraction when it falls also. But as long as you know what you're dealing with, there's different ways to trade an instrument. I'm seeing Q's just filled the gap in an ugly way, looking at all the fangs. Every single thing is pulling in. Um, car back to the high. I wish it gapped to $700, but I'm watching. All right, let me see what alarms are going off. SFBF, big fat nothing. Axon, that's a short sell setup. It's triggering.
That thing must have quite a spread, Dan.
Correct.
I mean, between the bid and the ask. I mean, it was 191, now it's 197.
Right. Right. So that is also a function of the options being spread. All right, should low alarm Williams. That was a short yesterday. Checkpoint might be stopping out. Yeah, so stopping finally.
Keep in mind that yesterday afternoon was like coma trading, just a grind, like the Qs were grinding up. The Dow was flat. The Russell was kind of flattish to grinding up, but point is, these may fill the gap here, which looks like S&P is going to fill the gap right now. But when you have a boring afternoon, that means that there's an end of day base. Now, likely it's going to hold there. With the dailies being where they're at, it would make sense to consider maybe it breaks. So we're going to see if it breaks before doing anything, because there should be buyers in the gap fill. But if it violates that end of day base, that increases the odds that it's going to go down and fill that daily gap. The one we looked at, pre-market. And so I think right now we're just going to have choppy price action until this gets resolved. Yeah.
A lot of these software companies, this is what I was afraid of. There's not a single one of them that I was predicting a new low, but the sell setups. But I was concerned that they could also turn into continuation patterns. Higher. So I'm canceling the remaining sell setups that we had pending. All right, Apple had nice gap. I don't like the way that came in. 32, 34.